Walker. I'm the editorial director of the FinTech Times, based in London and Dubai, and I'm here going to extract some confessions from Hosam. Thank you very much for joining us.
Thank you.
Before we get into the startup of Tabby, etc., can you take us back a little bit? What were you doing before that point?
Yeah, so I came back to Dubai in 2011 with having seen the growth of e-commerce in other markets in the US. E-commerce had started, I had been in the US for a number of years, seeing just how convenient that space was and how popular it became, and we thought at the time that e-commerce definitely had an opportunity in this market. The convenience it provided consumers was quite relevant. And so in 2011 set up a business called Namshi.com, which grew on to become one of the largest fashion e-commerce businesses in the region. And we were constantly faced with questions around why would people in this market shop online? People in this market love going to malls. What's the benefit to consumers of shopping online? I think 10 years later, you start asking the question of why do people shop offline? Right? I think the convenience of online shopping has proven to be extremely valuable, and so consumers see that. And so that was really what I did over the 10 years or 8 years building out Namshi. One of the big pain points that we face as an e-commerce retailer in the market, while there were many, was around payments and specifically around cash and the dominance of cash in this market. So when we started the business in 2011, about 85% of our volume was cash-based. 8 years later, that number went down to about 75%, so it was a very slow move away from cash. And so one of the early problems we were looking to solve, and at least that was how we thought about the problem in this market, was largely around solving cash. So fast forward to where we are with Tabby. We launched Tabby in 2020 as a buy now, pay later solution. Buy now, pay later had gained a lot of ground in other markets. In my view, it was a nice to have solution in markets like the US, Europe, Australia, etc., where consumers really had a multitude of payment options. Payment was not really a big pain point. Credit penetration was extremely high. Cash was not a problem. And so for me, buy now, pay later was an innovative, elegant solution, but it really wasn't solving a big problem in some of the markets that we were looking at. But more specifically in the markets that we operated in, the problem was a lot clearer. It was around cash, and as I mentioned, that was the initial hypothesis for us. But what became very clear very quickly was credit penetration in this market is extremely low for a number of reasons. One being the banks and how conservative they are, and the lack of flexibility in these types of solutions. And this is where things came together for Tabby.
Okay, so going back to that as the title of this is obviously Confessions. So what made you leave a very successful, well-run business that you'd obviously exited and start again from scratch, effectively? What was the thought process?
So since it's called Confessions, I'll also try to be as honest and unfiltered as possible. Honestly, it became boring, right? At some point, it became monotonous. We were doing the same thing over and over again, and the business was somewhat running on cruise control.
Yeah.
Not to say that we had solved it all, but a lot of the big problems that we had initially set out to solve were solved for. The other big piece for a founder is just when you stop being a founder,
yeah.
Right? And specifically with Namshi, that business was acquired, and it's a nice kind of success story at the end of a journey for a founder. But once that business is acquired, things change, right? And you become a lot less of a founder, kind of driving your own destiny and driving the destiny of the business and with full control and autonomy on how this business runs, versus you're an operator, you're an employee, yes, a executive and so on, but you're still an employee that is reporting and kind of the control and the direction of that business sits elsewhere.
It's not only is it a different sort of skill set required, but also a different mentality set as well.
Yeah.
Because you say it's about making lots and lots of small adjustments to the business to make sure it continues to grow and continues to expand. You're not getting the whole, wow, we just solved the problem.
You're not
That's the
anymore,
problem.
right? And part of the reason a lot of founders become founders is because they initially were looking to escape that corporate, corporate quagmire that they're in.
Yeah.
For many people, it's something that they enjoy. Founders, I don't know, I guess some of us are built differently. We just don't enjoy being part of a large organization where you're not really in control and not driving decision making and direction.
Okay, so basically you've made the decision, you're going to go and start something. You've already identified that there's this real pain point within the market. What was your kind of next steps? Do you go and tap up a couple of friends and say, come and do this with me? Or how did you sort of get it off the ground?
Yeah, so it was the space was very different in 2011. Let's say, I guess 2 eras of startups in the region. In 2011, capital was not available at all. It was quite the risk to go out and start something from scratch. Venture capital was extremely nascent in this market. And so the route that we took was partner with a global, I guess if you want to call it a startup incubator at the time, it was Rocket Internet that provided the initial capital for us. They provided a lot of the support. And so I think that was somewhat necessary back then. And while the risk was there of leaving a well-paying job to taking something that was a lot more risky, a lot of that risk was mitigated through, at least the financial part of it was taken care of, at least in the early days. Now fast forward to where we are today, at least funding risk largely is solved for in this market. Especially early stage funding is available, and especially when we were launching the business in 2019, it was probably one of the best times to go out and raise capital globally, but also in the region, where early stage capital became extremely prevalent. Interest in venture was very, very high. And so, and being a second-time founder, that also really helped. Right?
Yeah.
Just getting access to the right people, it opened up a lot of doors, and we were able to come in with a solution that was somewhat proven in many other markets, and we said, we believe that this problem is a lot more relevant for ours.
Because in that early stage, it's very much about because you don't have a product, you don't actually have anything substance, you have an idea, you have a proposed market fit for your solution, but obviously you had a track record. So from that perspective, the entry into getting sort of seed capital was a little bit easier.
At least the capital piece, right?
Yeah.
But then you're solving for a whole set of new problems. And again, FinTech was very, very early at the time.
Yeah.
And so you're proving something new in a market where that hasn't been proven before. And you're still having to get people to take a risk, to make a bet on you. And was this? I guess one of the questions that I would ask myself at the time was I a one-hit wonder? Was it just going to be a one-time success? And so there was definitely a lot of burden that I put on myself to ensure that there was a real use case in what we were trying to do, a real value that we were trying to build in this market, rather than just building a solution that seemed to work in other markets to a market that may or may not have needed it.
Yeah, because and obviously with that, as you were starting off, the whole debate over regulation for buy now, pay later solutions, etc., are in there. This is another confession time. Did you have any idea of what sort of regulatory hurdles you may or may not encounter when you started and had the idea, or were you sort of figuring it out as you go?
So it was still very early, even globally, on the regulatory front. There was talk of regulations happening. I think the view was let's have a high-level view of what regulations look like in this market. However, not necessarily solve for it fully from day one. I'm aware of a couple of companies that tried to solve for regulations from day one, and they're still trying to solve for regulations 3 years later. So I think in our view, and I'm sitting in a DIFC event saying that my recommendation would be to ask for forgiveness, not for permission. Sorry, Christian. but honestly, I mean, again, in a space that is relatively nascent, it's very difficult to expect the regulators to be ahead of it. And therefore, we needed to go out and experiment and have data to come back to the regulator with at some point and say, hey, listen, this is what we're seeing. The risks are clear, they're mitigated. Let us know what you'd like to do, and we're ready to talk when you guys are.
Yeah, and I guess depending on how you define fintech and e-commerce, do you consider you moved industries into Tabby?
That's a good question. I think one of the things I was thinking about when considering what my next step would be after Namshi was the relevance of my experience. And for Tabby, while I didn't have experience in payments specifically, digital was an area that I built a career in, and understanding the pain points of a retailer, especially an online retailer, I think were quite important to building what we built out at Tabby, right? So, if we look at maybe just to explain Tabby to anyone who doesn't know, we provide installments and flexible payments for initially online retailers, and the way that we do that is we split consumers' payments into 4 equal installments that are fully funded by the merchant. There's no additional cost on the consumer. And the value that we provide to merchants is largely around our ability to increase conversion rates. So customers are more likely to transact if there is an installment at checkout. They're more likely to spend a bit more. And so we're solving for an acquisition problem for these retailers that invest very heavily in customer acquisition and marketing. And bringing people to checkout only for many people to drop off because payment options are not very flexible. And so, I put myself in the position of a retailer. I said, these are real problems that we're trying to solve for. How can we ensure that we're coming with a set of solutions that resonate with them?
Yeah, and I guess that perspective, as you say, you lived and breathed that problem for your previous company. So actually it was relatively easy then, I would imagine, to talk to other retailers and say, I know you've got this problem.
To sell it to them, right?
Yeah.
I was there only a year ago, and we saw these problems together.
Yeah.
And we're coming with solutions that are just going to really move the needle for you.
Okay, so let's move a little bit further forward. So obviously startup phase is a really exciting point. You're feeling lots of problems, you've got loads of different things going on, small team. What was the point where the team started growing and you're sort of starting to make that sort of transition, if you like, into scale up? What was that like?
Yeah, so I would say a couple of years in, you start to recognize you've grown up as a business and that you need to operate differently, right? Doing things in a hacky manner. You still need to do it to a certain extent, but you can't overdo it, and that can't be the modus operandi of the business. So, from a regulatory standpoint, we need to do things right. From a kind of consumer privacy, data, et cetera, we need to ensure that we're protecting the consumers that really entrusted us with a lot of their data. So you definitely need to bring on a different type of employee into the business. Early on, we're bringing hungry, relatively inexperienced employees to come in and just roll up their sleeves and learn as we go. We're all kind of in the same boat together. We're all building something from scratch in a market that hasn't seen this before. And so what brings us all together is a desire to build and to just be very, again, hacky in how we build. And I think looking at where we are today, we're bringing on a compliance officer that lives and breathes compliance. People in the payments industry that have done this for decades. And it's a very different type of profile that comes into the business 3-4 years in or at scale-up stage than those that are willing to take a bet on the business in the early days. And it's a bet that's quite real. Yeah. Right? We're also in the early stage, you're not compensating people as well as they otherwise could have been compensated in other places. And they need to be willing to do that, and they need to be willing to give up, for the short term, for that kind of long-term goal of building something that could be big, and that could not go very far either.
Yeah, and that was one of the things I was going to ask about. Obviously, when you're the co-founder and the CEO and you start off, you know everyone, everyone knows you,
Yep.
and then you get to that point where did the original team stay and take on sort of more senior levels, and what was that sort of transition like for them as well, do you think?
Yeah, I think what's great is, and we've seen this before at Namshi as well, a lot of the original founding team, at least the people that stay on, really believe in the vision that you're trying to build for the business, and they become owners of not just the business itself, but owners of what we end up building out. And so it's that team that you want to keep on. You want to ensure that they're motivated, they continue to get excited as a business, and I feel it becomes very difficult once you lose these people, once you lose their interest and their motivation to continue building.
Yeah.
Right.
I guess it's quite, for you personally, you need to have those people because I guess you don't do every interview anymore for every new person that's coming in. So you have to then put your faith and rely on this team of people that you've built from the beginning. So that there's a sort of an emotion, I guess, as a founder in there as well.
No, for sure.
Yeah. And so is that an area that you kind of felt quite comfortable with the sort of the art of delegation, as it's called, and being able to allow people to go off and do stuff?
It's a very difficult balance, right? I think what you don't want to do is delegate too much and remove yourself from the business. And I think many of these scale-ups and these startups that have gone on to succeed, the founders remain founders, right? I think it's very difficult for us to become a CEO in the traditional sense of the word, where you just have a executive team that runs things and you're informed and kept up to date of what happens. I think in order for a startup to really continue to see continue to build and innovate and scale as effectively as it did in the past, that founder touch needs to remain there, both from kind of a motivation perspective, but also I think for employees, they want to feel that this founder is invested.
Yeah.
That's why they signed onto this business in the first place. There was that founder touch, that being close to how this business was going to be directed, where the long-term vision of this business.
Yeah.
I think that what they don't want to do is lose that. And once you lose that, and once you remove yourself from being close to the business, I think things start to break very quickly.
Yeah, and I think, as you say, it's that founder vision that people buy into and want to come along for it. So sort of coming towards the end of the conversation now, where's that vision taking you? What's next? What's on the horizon? And do you know any of the challenges that are coming?
Yeah, if we look at maybe just 3 years ago, our view was very simple. It was, let's provide a flexible payment solution for consumers and merchants that solves an online problem. And what's become clear very quickly is the opportunity is a lot bigger than that. In a market where payment is still below where the innovation that we've seen in other markets, where credit penetration is extremely low, and banks are leaving a lot of people behind. Right, they're leaving a lot. They're leaving a significant portion of the population behind. There's an opportunity for us to go out and building a fair set of solutions for these consumers, a fair set of solutions for the merchants that sell to these consumers. And so where we are today is, while we feel that we've cracked to a large extent payments at checkout, the larger opportunity is going out and cracking payments in the offline world, providing consumers with more seamless credit across the entire value chain of where they shop. Today, still 90% of commerce, of retail, happens offline, and so that's a big problem that we're trying to solve for. But really fair, seamless financial solutions is something that we believe is a real opportunity for us in this market, and something that we want to go after.
So still plenty of challenges, still plenty of interest to keep you entertained.
A lot of excitement. Yeah, absolutely.
And as a very final thought, if there's people in the audience that are thinking about starting a business, getting into a startup, what would be your sort of one statement, or what would you say to them? What would be your advice?
Yeah, maybe it's not a statement, but just a group of statements. I guess the one thing, I left the corporate world because I wanted to do something on my own. I wanted to build and just feel the excitement of building something new. And while there's a lot of value to it and a lot of merit to that, it also comes at a significant cost personally, right? There's a lot that you give up on and that you need to sacrifice personally. I mean, there's never a day that goes by that's not stressful, and while it's extremely rewarding, you know, it does take a toll on the person. So I think it's important to realize that it's not all about the spotlight and stuff like this. Honestly, I mean, I told you earlier, it's not what I enjoy doing. And if you're building a business for the spotlight, then you're probably doing it for the wrong reasons. There's a real toll that it takes on you personally, and you need to be willing to accept that, right? So it's absolutely incredibly rewarding to go out and build a startup from scratch, but it's not all fun and games.
Sounds amazing and a wonderful place. Thank you so much for spending the time talking to me.